With the current situation on the market, the rise of the inflation, and the current war in Ukraine, you might be wondering, hey, but where should I invest my money right now? Well, in this video, you will find what are the best Canadian dividend and high-growth stocks that you can buy on the TSX market right now to fly to the moon. But before to continue, make sure that you join the North family by subscribing to the channel for only $0.0. Now let's see my pick number one. So the first stock that I wanted to present to you is the biggest e-commerce and tech company in Canada, which is Shopify. For me, this was an easy pick since the stock is down more than 50% at the moment and has a great PE ratio of about 26. This company is an e-commerce platform for different online stores, and it is currently criminally underrated on the TSX market.
Yeah, boy.
As I told you earlier, this stock has lost a lot of value in the past months because of two main reasons. The first reason is the fact that throughout the year of 2020 and 2021 during the pandemic, Shopify had a tremendous run with more than 86% of increase in their sales, which represent about $3 billion of revenues. This is insane knowing the fact that between 2019 and 2020, Shopify has had about 46% of growth in their sales. Of course, this is due to the pandemic because a lot of people lost their jobs and a lot of shops closed. So what happened is that the e-commerce come back stronger than ever. But now that the pandemic is pretty much over, we know that the interest rates will increase in the next months, and so the capital from the equity will normally switch to the debt market, which is also one of the reasons why Shopify has lost a ton of value during the past couple of months. But guys, I must confess, I did tell you a little lie because there are not only two reasons why Shopify is currently on a downtrend, but there are three reasons. The hidden factor is actually the fact that we have a big interrogation mark right now on the growth of the e-commerce market for the next couple of years. This is due to the end of the pandemic, which is a really good news for most people, but for the Shopify investors, they might be a little bit afraid of it.
Oh, crap.
Indeed, throughout the pandemic, everyone was buying everything online since all the shops were closed. But now, what actually happened is that everything has slowly and start to reopen, which means that people are restarting to go buy in shop, and that the e-commerce has been decreasing slowly in the past months. But of course, the Shopify market and the e-commerce market will continue to grow and grow in the next years since there are more and more demands into that particular field, but it might not grow as fast as it was during the pandemic. However, do you know how many people are using Shopify? There are actually 2.1 daily active users on the platform, which represent about $320 billion for the economy yearly. This actually makes it the third largest e-commerce platform in the US. This is also knowing the fact that the market is expected to grow a lot in the next couple of years, and that in 2041, 95% of the total purchase will be made online. That means that Shopify will definitely be one of the main actors in that field. And Shopify is mainly making its money throughout its subscription plan that is split between three different plans. First, you have the basic plan that costs you about $29 per month, which offer you some 24/7 support and unlimited products. However, you are limited to only 2 different users with this program, and you have some higher fees of transaction and some lower discount fees. So you have the intermediate plan for about $79 per month, and the most popular plan, which is the advanced one, for $299. Aside from that, you have another option which is called Shopify Plus. This only helps corporate customers with large volume to get more traffic on their website, and this costs about $2,000 per month. In 2018, this plan had about 5,300 different clients all around the world. All these services help the company to generate about $1.4 billion in revenues in 2021. However, they have generated some net negative income and net operating income in the past year, but in the fourth quarter of 2021 with the earnings, they have surpassed both the earnings but also the revenues that were predicted. That means that just like Tesla at the beginning, they are not able to make a lot of profit right now, but they are still able to beat the predictions. For the valuation of the company, you can see that they have such a huge valuation, about $73 billion. They also have an excellent profit margin of about 63% and a great return on equity of about 33%. What is really astonishing is the cash on which they sit of about $7.79 billion, which is way more than $1.17 billion of debt. So that means that they are not using that much lever to be able to function the company. And this is pretty much reflect on the balance sheet of the company, where the assets have been growing very fast in the past couple of years compared to the liabilities, and we see it in the equity increase that have been phenomenal as well. And finally, all the cash flow have been positive in the last year. Only the investing cash flow was negative. So right now, with the current Shopify dip and also with the potential growth on this sector, I really see a great opportunity to maybe start a position on my side. Now for my second pick, I've decided to choose one of the best dividend Canadian aristocrat, which is a leader in the banking sector in Canada. Today, I'm going to talk about TD Bank, which is truly a hidden gem to the world.
Precious!
Toronto Dominion Bank is currently the second largest bank in Canada and the fifth one in North America, just behind RBC with about $144.6 billion of market cap. It currently has a tremendous PE ratio of about 13 with a great dividend yield of about 3.8% that has been growing through times with a payout ratio of about 40%. Since 1 month now, the stock has been correcting of more than 10% and is trading about $95 per share. This bank currently have more than 2,200 different locations all around North America, but also in the world. Indeed, to expand their southern market in the US, they have recently bought First Horizon for about $13.4 billion. Throughout this acquisition, TD has been able to solidify its position of long-term growth strategy in the US. And this acquisition gave them a 13.5% stake in Schwab. Of course, as being a bank, the business model of TD is to deliver some financial services and financial products to their clients. For example, they are creating some bank accounts, credit card, insurance, and mortgage. With all their services and product, they also give you an exposure not only to the Canadian market but also to the US market. This company has a valuation of about $170 billion with some lower valuation measures compared to Shopify. They also have a great profit margin of about 33% and an excellent operating margin of about 42%. And on 1 year, the return on equity has been around 15%. And we can also see here that the company is also sitting on a lot of cash, about $539 billion compared to $300 billion in debt. But we can see that the total revenue haven't been growing very much in the past couple of years compared to Shopify. And this is also reflected in the total assets of the company that have been increasing more than the liabilities, which gave more equity to the shareholder. I personally love that stock since it is one of my favorite Canadian stock. It gave you some great dividend. It has also some great potential of growth since it is down more than 10% since the beginning of the year. So I really think that you have some great opportunities with that stock, particularly right now, knowing the fact that the rates will increase. But of course, I am not a financial advisor, so it is only my personal point of view, and always make your own research before to do your own investment. And guys, I'm about to make a brand new challenge on this channel from $100 to $100,000, so make sure to stay tuned by subscribing to the channel. And if you would like to know what are the best Canadian ETFs that you should buy right now, check out this video that is going to be right over here, and I will see you there. Peace!